Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is February 8th, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. We looking at the 4-hour chart of the euro versus US dollar and trading yesterday. You see this blue line right here. This blue line represents the 100-day moving average. We fell below it on Monday, and in trading yesterday, we moved just a bit above it, but rotated to the downside and closed below that level. In trading here today in the Asian, or actually in the European session, maybe early European, late Asian session, the price did move back above that 100-day moving average, 1.07789, but we fell short of the 50% midpoint. That 50% midpoint of this move up from this low right here, going back to the month of September, to the high price that we saw in the month of December. If the buyers are to take more control, getting back above that 50% retracement, it's probably a wise thing to do. We recall from last week's trading, the price lows came in against that 50% before breaking to the downside, testing the 100-day moving average and failing, and then reestablishing support against 50% retracement before moving to the upside. So getting above both those levels is needed to increase the bullish bias. We got above one, we couldn't get above the other, and as you can see, we rotated back to the downside here on the failed break above the 100-day moving average, so we're seeing the euro moving down, the dollar moving higher. On the downside, what is key here for this currency pair is the low for the week and the low price going back in time, or a low swing level going back in time that comes in at 1.07223. That low was really developed from a couple things. One, this swing high right here, which forced itself down to this other swing area before moving here and breaking above that level. Then we came right back down to that same level and found support buyers against that level before moving to the upside. And in trading this week, we came down to it not once, but twice or three different times on these 4-hour bars. And each of the time, the market found support buyers against that level before moving to the upside, moving back up to our 100-day moving average, 50% retracement. So there is somewhat of a battle going on with the 100-day moving average, and this swing level down here below that level comes to 61.8% retracement at 1.0712. So battle going on. Need to break above the 50%, need to break below the 61.8% retracement as well on any sort of break in the direction either up or down. Let's take a look at the dollar versus yen next. And if we take a look at the hourly chart in this currency pair breakout, if you call that, again, this is the hourly chart. So this is earlier in the week, the high price on Monday came up and broke above the old high right here going back to January. This is the old high for the year. We tested it here, moved a little bit above it, and then had a little bit more of a bigger break above that, only about 8 pips before the market rotated back to the downside and came down to test the 100 bar moving average not once but twice, and then fell below the level but could not get below the 100-day moving average. We saw the price move higher in trading here today. We did see the price move back below that 100-hour moving average, which was a bit of a disappointment on the break in the Asian session, and we could see that being reflective in the price rise in trading here today. That pushed the price to the upside, and it's racing to the upside now. The price is above the 148.88 level and moving to new highs for the year. And let's see where we stand on this off the daily chart. And if we look at this going back to this point right here, this is the November 28th. And over this 4-day period right here, we'd had a number of different highs that came in at 149.70, a nice little high target up there. And that was our target on a break of these highs through here, 148.80. By the way, the 148.80 level had other interests right at this level right here. We moved above below it here, and they use it at level as resistance here. So it had more than just what we've seen lately at that 80 level. So breaking above that level with momentum looks toward the 149.70 level, and then we look toward the 158.15.8 level. All these different swing highs came into that area, got a little messy through here before breaking below level and using this level as a resistance here. So that 149.70, 150.15.8 is the next target on the top side for the dollar versus yen. On the downside, watch the 148.80 level. Once again, is what was once resistance is now a support. As long as the price remains above that level, the bias remains more to the upside for this currency pair, dollar yen, more bullish. Let's take a look at the sterling versus US dollar next. And if we use the hourly chart, for a 4-hour chart to look at this. We moved back above the 126 level yesterday. The 126 to 128 area. I can find the trading range for a number of different weeks through here. We fell below it earlier this week, and the bears took more control and moved back above it yesterday, which kind of put a damper on the bearish bias. But as you can see in trading here today with the dollar moving higher, we are seeing the price move back below in the current bar, so that the bears are taking more control. We're back down to this swing area through here, and also looking to test that 200-day moving average. We're going to need to get and stay below the 200-day moving average at 1.2562 in order to increase the bullish bias for the sterling versus US dollar. Now resistance comes in at 1.2600. So there you have it, a technical look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.